Good morning, everyone, and happy Wednesday. May 1st is going to be an amazing month. I'm so excited to have you all here as we kick off May. What a tremendous day we had on Monday. I'm so excited for today's session. We had so many good topics that we discussed on Monday that we can incorporate into today's session as far as things that we're seeing working out. We talked about the Russell trade setup on Monday as far as that rally to the upside that broke above resistance, leading to a potential wick over wick reversal. And I can see from the chat that Patrick got in on that short trade on Russell, so excellent. Let me know if anyone else was able to take part in that. But again, I want to give you those clues as far as what to look for prior to these big moves in the market. 6 p.m. open on Tuesday was that day to get in on the short trade, or sorry, on Monday. So right at the end of the live trading room session, there's a little bit more volatility later in the day. We closed the session pretty bullish, but if you'll notice where we ended up closing, it was right in many of those wiki areas on the equity indexes. When we're in those wiki areas, make sure that you pay attention to those because those are where we look for the markets to start turning. That's what led to this pullback on the equity indexes. So instead of me just talking, let's jump into it, and I'll go over our prep screen for today. All right, so trading tip of the day, waiting for the highest probability daily setups can lead to some of the longest running trade opportunities. Now, keep that in mind. This is something that I look for day in and day out as far as my trading, especially when the 6 p.m. market opens for futures. So keep that in mind. Waiting for the daily setups. Once you see what the daily candle looks like, that should give you an idea of as far as what and how to trade the following day. So longest running trade opportunities like the Russell trade that we talked about on Monday in the live trading room. So let's recap a little bit so we can understand how we can prep for some of these trades. I'm going to start with the Russell since that's in our trading tip of the day. And I'm going to use the micro just to illustrate. Okay, micro Russell daily time frame. Guys, remember how this looked on Monday? So this is pretty much how it looked. Let me go back and show you what that picture looked like. All right, so this is how Monday looked. We were getting in on that breakout to the upside. It was a pretty good setup. We talked about the 2-candle flip down here. We had just formed one here, so we got that push to the upside. And I remember talking to you guys about this. I said, be cautious because of how price broke out to the upside. Now, if you notice, this is our setup that we've talked in all 3-day events that we've had, the flip trade 3-day event, master trading strategies, master day and swing trading. It's the same setup day in and day out. So when you have a resistance level, you only need 2 touches. Remember on the daily time frames, those wicks and the support and resistance are stronger. So only 2 touches is needed. Just find an area of resistance and find an area where you have a breakout. So notice we had that resistance, price struggled to push above it, and then it took out that resistance. So step 1, we had a breakout. Step 2, look left and see where it's breaking out into. Now, for me, what I liked about this breakout here is that it rallied right up into this wick over here. So this can be what we consider one of those wiki areas, or if you see a breakout into a long wick like that, this wick shows you that there is a tremendous amount of selling pressure here. So you can see it's just breaking out right into that stack of sellers to the left-hand side. Also notice if you kind of step back a little bit and look at the bigger picture as far as where it's breaking out into, if you notice this drop, kind of drop base drop that happened, you can see red candle, price stopped, we based for a day, and then we continued to the drop. If we look left, we can kind of map out a support level that had been holding for 1, 2 times, and then the breakout. Who can tell me what we call this bounce here? When we get that bounce and then a breakdown, when price rallies back up into that bounce, what do we call that? Because it's that last bounce before a big breakout to the downside or a big breakout to the upside. This one here, who knows what we call that? Any guesses? And you can see it was that last, good job, Patrick. There we go. We're putting the pieces together. Patrick does an amazing job at putting all this information together. Yeah, so that's our controlling breakout. Pivot. All right. So when we put all the pieces together, we've got a controlling breakout pivot. We've got a wiki area. We've got a right here. This pink box, that's what we call resistance, which then led to a potential fakeout breakout. And then lastly, who can tell me what the entry is to go short below the low wick of the second green candle? Who can tell me that? When we have a breakout and we have 2 green candles going up, what do we call that short entry to go short below the low wick of the second green candle? Yep, Dwayne's got it. Wick over wick, and that's our reversal. Perfect. So that's that wick over wick that caused the breakout to the upside. So when we go short below it, that's saying that we're looking for more of a longer running reversal move. Wick over wick reversal. All right. So this is prime example, putting all the pieces together and waiting for these setups to happen once we can implement all of the things that we've learned in the 3-day events leading up to today's live trading room. So then it boils down to, where is our entry point? You use the same information that we do on the daily time frame as you do for your entry point. Now, was anyone paying attention to the 6 p.m. open on Monday night for that entry? Notice how we opened. We didn't even get much of a bounce. We pretty much opened and just started dropping. The best time to enter your trades may not always be waiting till the morning session. So if you're waiting till the live trading room sessions or an hour before, you may be missing out on the best entry point on some of these trades. So again, keep that in mind with paying attention to the 6 p.m. open. When this opened at 6 p.m., we just dropped from there. So let me show you that entry point. I'm going to come down. I was watching it on the 10-minute time frame. I'm going to go back to the 6 p.m. open on Monday. Let's see. Yes, it was right here. Let me zoom in. So the 6 p.m. open, notice how when price closed on Monday, we closed here. And then when the 6 p.m. open happened, it opened up out here. So it actually gapped up. Now with that gap up, once it starts coming down like that, and we broke all of the support. So that's when we should have been going short, was right after the first 10-minute candle at the 6 p.m. open, because that's when we gapped up. It got a lot of the long traders in. Notice to the left, we've got a 2-candle flip over here. We've got a controlling breakout pivot over here. Once we opened and started breaking that support, what did we just form on this breakdown at the 6 p.m. open? What did we form when we gapped up and then started breaking down at the 6 p.m. open? Might be a little tricky, but who knows what that ended up creating when we have a pop up and then it starts breaking down through support. Good job. Patrick, did you get in at the 6 p.m. open, or were you watching it then? Yeah, right when that happened, we formed a new, okay. At least you got the short. Keep an eye on these. 6 p.m. open, and great time to pay attention to some of these setups. This one was beautiful setup because we literally gapped up and then started breaking down. That's when we formed a new controlling breakout pivot. As you can see later on, it got a little bit more volatile as we dropped and then started rallying. But ultimately, that controlling breakout pivot is where we look for our trade opportunities. So again, love this setup on the Russell. Similar setup on all the other equity indexes, and putting all those pieces together. But again, implement what we talked about on the daily chart on the smaller time frames, on the 10-minute, 5-minute, however you want to enter your trades, and ultimately waiting for either that controlling breakout to form, getting in then, can often be the best entry point versus waiting for a pullback and trying to pick a top. Again, keep that in mind. All right, any questions on our recap from as we start our session today? I was just so excited to go over all this with you. Make sure you take a screenshot of this. Again, great example, putting all the pieces together from everything we've learned during our previous 3-day events and during our live trading sessions. So I'll leave that on the charts for now. We'll use the Russell to go over our prep screen zones and then cover the rest of our prep screen. So today is a big day. It is FOMC announcement day at 2 p.m. Eastern, so expect some of that volatility to come into play. We do have many other economic reports coming out, including PMI manufacturing at 9:45 Eastern. We've got construction spending and JOLTS at 10 a.m. Eastern. Then FOMC announcement. We've also got crude oil report. So it's going to be a pretty busy day moving forward. Let's see. So moving forward, we already had Treasury refunding. We had ADP employment. So a couple economic reports that have already come out. Let's just see. Coming over to Market Watch for a moment, just seeing the ADP numbers. So ADP says 192,000 private sector jobs created in April. Labor market not cooling off much. So that's pretty bullish. If we're getting 192,000 private sector jobs created in April, that can be bullish for the economy. So kind of seeing the result of that and looking a little bit bullish as we start off today's session. And then other economic reports mentioned, let's see, PMI, ISM, construction spending, JOLTS, all going to be around the 9:45, 10 a.m. Eastern time. We also got oil reports, so we'll take a look at that. And then FOMC announcement. This is the big one. Be careful with your trading in and around 2 p.m. Eastern. Right when it hits 2 p.m. Eastern, that's when we see the markets have those huge shuffles. It can stop a lot of kind of more beginner traders out and even the more advanced traders. So just be careful in and around that 2 p.m. Eastern, as well as the Fed chair press conference at 2:30 Eastern. Coming out to, let's go through the equity indexes now. I'm kind of debating, I want to ask you guys, from all the time that we've been here in our live trading sessions, is it too noisy having all of our previous zones on here? Would it be better just to have a clean kind of slate with one on each side? I don't know. For me, sometimes keeping them here, I feel like it gets a little noisy. What do you think? Let me know if you have any thoughts on that. I'm happy to, if everyone wants me to, clear off some of the older prep screen zones and just kind of keep it more current so we can focus in on the daily trade setups. But let me know what you guys think. S&P for today. So we did gap down, and notice where we gapped down into. So we did gap down right into a pretty strong wiki area. So that should have been an indication to hold off on the short positions and wait, because we're dropping right into a very strong buying wick. Okay, thanks, Patrick. Yeah, I'll leave it then for now. Yeah, as we zoom in, it gets a little bit cleaner. So daily chart, again, gapping down right into that long wick. That's where all the buying is. So you'd want to be, again, holding off on the short trades. The best short trade was up here. Daily perspective. That's when we had our wick over wick reversal. So kind of recapping how we did the Russell trade. This one didn't have the resistance breakout wick over wick reversal. This one was a little bit different. It did rally up, and then similar to the Russell, it rallied up into a controlling breakout pivot. So to the left, we have support, 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 support. And that last bounce before the breakdown was right here in this wick over wick. So this was the controlling breakout pivot. You kind of isolate that wick over wick. Just marking with a pink box now to show that that's where we had that last bounce before the breakdown of support. That wick over wick on a daily chart, when you drop it down to a smaller time frame, for example, a 4-hour, it'll start looking more like a pivot point. And just keep an eye on that. So if you see a wick over wick on a higher time frame, that's going to be a pivot point on a smaller time frame. I just wanted to show that on the 4-hour. Going back up to the daily chart though. Now showing that here, that was the controlling breakout pivot for the breakdown. And that's where price rallied right up into. Just came right up into our controlling breakout pivot to the left. The entry would be that, let's see, not really a wick over wick reversal, not a 2-candle flip either. This is a red candle when you stretch it out, so it's not 2 green candles coming up. Let's see. If you don't have it on a daily chart, I had a student mention this the other day, sometimes going up in time frame can help. If you don't see the right picture on a daily chart, I've been doing this a lot more too. Sometimes going up in time frame can help simplify, whereas going down in time frame can make things more confusing. So if we go up to a 2-day, let's just see how that changes the picture. In this case, it's not really helping because we're losing candles. We still see the fact that it is rallying into that wick over wick to the left side, which is our controlling breakout pivot. So maybe going up in time frame doesn't work all the time. Let's try a 12-hour. All right, so then the 12-hour, to give us that picture without getting lost in the smaller time frames. We rallied up into that controlling breakout pivot. You can see now it looks more pivoty versus before it was that wick over wick. And now as we rallied into it, notice to the left, we can now see the details of resistance, pop above, 2-candle flip, because we have a green and a red candle. That says look to go short below the low wick of the red candle. Going short below there, that gave us our from 51.17, about an 80-point move to the downside from that. So I'd say if you like the daily chart, if you're more kind of leaning towards swing trading, trying to stay in trades longer, use the daily chart as your foundation. Go up in time frame to see a little bit less detail and to make it cleaner. When you're honing in on entry points, you may want to go down to a 12-hour or a 10-hour just to hone in on that fake out, breakout, 2-candle flip setup. All right, so again, I mentioned on the daily chart, we drop down into this long wick. So not really looking for an aggressive short at this point. We missed the short because that was up here. So again, we want to be kind of on top of these things ahead of time. We had that tremendous move yesterday going short here. Now that the move is already kind of underway, a lot of people are trying to go short now when they already missed the move. Now what they're missing is that now maybe we should be looking for a long setup because we dropped into this long wick here, which if you'll also notice on the daily chart is where we have a daily 2-candle flip setup. So red and green, this is where price is stalling. Again, the shorts, be a little bit cautious going short too soon because we are dropping into a wicky area and a 2-candle flip. A lot of teaching as we start off today's session. Hey, Callie, no, not yet. While we wait for the equity indexes, let's start with crude oil. Wow, amazing trades. Has anyone gotten in on our crude oil short setup? This was our spotlight on Monday as well. Same setup. We talked about this one Monday. Did you get the short trade setup, Callie, on crude oil? I think we may have gotten, it may have wicked us around a little bit in our entry when we took crude oil. But yeah, notice on Monday, or actually this was back on the 26th, that was from Friday. So yeah, we're looking on this day for our short trade, what we discussed. Yeah, we'll backtrack and you're not going to miss it next time. We had our 2-candle flip that was formed Friday. That 2-candle flip was formed in this huge wick over here. This is all just wicky area to the extreme. 2-candle flip right in that wicky area. It says look to go short below the low wick of the red candle. Should be right there. And then stay with it to the downside. Then how you look to stay with it day after day is looking for wick over wick continuations to the downside. I know a lot of people are trying to pick bottoms on crude oil, but we're not seeing it yet. Follow the 2-candle flip and trade in that direction. So coming down to the 1 hour, seeing how that looked and how it panned out throughout the day. That 2-candle flip, we found a controlling breakout pivot. That last bounce before breakdown. Price dropped, came back up into our controlling breakout pivot, that 2-candle flip there. Broke. Then we formed another controlling breakout pivot. That's this basing area here, price rallied into, another short trade. So now as we're coming down, again, we've missed a lot of the bigger move from the top down. I marked this 2-candle flip here. The reason why I like this one is because it's lining up with this big wick to the left-hand side. So it's a 2 candle flip in a wicky area. That's going to be our spotlight trade, 81.75. Stop at 82.18. 81.75, stop at 82.18. If you pay attention to the futures market open, if we take a step back and see how crude oil opened, we gapped down on crude oil. And the reason why we should have been looking to go short then is if we backtrack, we can see that we had a 2 candle flip that formed in a wicky area. That's all saying the selling pressure is underway, and then we should be looking for our short trades. So keep an eye on the 6 p.m. open. Again, a lot of trade opportunities do occur when that happens. Now, with what to do today, looks like we're getting close to a potential breakdown. I'd be careful going short right now. Sometimes these breakdowns short just end up dropping into some previous zones. So you want to be careful going short after a move has already happened. Ideally, waiting for those pullbacks can get us in at better entry points. So for crude oil, let's zoom in for a moment. Now we could do this one of two ways. We could take the short trade on the breakout, which would be going short below this support, but then we're placing our stop above the wick area, which is above 80.93. That is about 60 ticks worth of risk, or $600. Not something I like to take that much risk, especially because of how this is looking here. A lot of times these setups where it bases a lot like this can lead to a breakdown, and then it can quickly become a fake out breakout to the upside. So I'm going to hold off on crude oil for right now. Again, I'm not comfortable going short on a breakout at 80.30, placing my stop at 80.93. And that's 63 ticks or $630 worth of risk. It's pretty extreme, pretty risky. I'd rather wait for a pullback to a 2 candle flip sell zone. So again, I'm going to hold off for now. We'll see if maybe price can rally up into our 2 candle flip zone for a short trade. That would be nice and give us a better entry for a short. Yeah, just basing consolidation for the past couple hours. So be careful, crude oil. We'll see what happens as we proceed during our session today. But I'm going to be looking for that pullback for the short trade. And that 2 candle flip, who can tell me, is this 2 candle flip is located in what? So support, 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 broke through support. We have a 2 candle flip there. Good job, Callie. That 2 candle flip's located in a correction, that last bounce before breakdown. And then what do we also call those corrections? You can call it a correction. I like that as well, because it is that correction back up before breakout. What do we also call it though, once it does have that breakdown? That last bounce is called yeah, Patrick's already said it. That's our controlling breakout pivot. So we'll wait for that. Again, trading here, it's going to get a little bit choppier. I like that, Julius, too. Anchorable pivot. Absolutely. You can see those are the ones that hold time and time again. It's always that last bounce before a breakdown. I'm going to remember that anchorable pivot. It's that anchor that's holding that breakdown and that momentum lower. So look at that last bounce, and that's where the majority of the sellers or buyers are going to be located. We like it, Julius. All right, so we're going to wait for that. Again, trading before that can be getting into a trade too soon. Let's go out to the equity indexes, just see what's going on in our grid. Russell is rallying. It's like we're getting close to a prep screen zone, so I might jump over to that one. Dow skyrocketing, NASDAQ flat, S&P rallying. What's going on with Russell? Let's see if we can get in on that one. Okay. Got a 2-candle flip here. 1994, stop at 2001. I'm liking this one because again, it's that bounce before a breakdown where there's often a lot of sellers. You can also see it as a drop-based drop. Just make sure you're looking for it above support. Wouldn't really call that a controlling breakout pivot. The controlling breakout pivot would be more up here on the Russell. So if you look up a little bit higher, here's where we had more evidence of support. I'd say this is kind of the controlling breakout pivot. This one is more kind of a drop-based drop situation. A little bit more elevator risk with this setup. I will look to take it on a little bit more confirmation. In order to do that, let me mark this upper one because this is our CBP over here. Or purple pivot. Thanks to Julius. All right, so then that makes the one that we're looking at down here a little bit more elevator risk. If you do have it, sometimes these do work. Come down to a smaller time frame and just hone in on your entry point. See if you have a fake out breakout, 2-candle flip. Any of those things can help you build your confidence in the trade. Wow, we did just tick into it. Let me see, 1-minute time frame. Okay, we're still basing down here. On the 1-minute time frame, it's looking pretty wicky. This is where if you don't want to take zone trades just as is, and you feel that sometimes your zones work, sometimes they don't, go down to a smaller time frame and observe everything that we're talking about. That can help you with building your confidence on taking that zone once you get a little bit more detail. I want to see price push up, kind of get a breakout, and then I'd be looking to go short below our wiki area. That entry is going to be below 1990.3. It's getting in a little bit later after the zone, but it also gives you more confirmation of that reversal. Instead of trying to pick a top now and then it's going against you. This is where a lot of traders can get nervous with their zones if they're unsure whether to take it or not. And again, keep in mind, back on the daily time frame, let's see where we're at. Remember, the daily chart is your foundation. A lot of buying coming in, and everyone should know why. Again, we weren't going short today. Got this huge 2-candle flip down here on the daily time frame. Price dropped into it and we're rallying. Huge wiki area as well. All in here, just tremendous amount of wicks pushing price up and buyers coming into the market. So again, today we should have been looking to buy. We're up about 0.43%. So the buyers are in control at this point. Therefore, as you go down in time frame, keep that perspective that the short trades are going to be a little bit more elevated risk. That's where maybe you don't want to use zone entries. You want to wait for a little bit more confirmation on the smaller time frame. So let's set this up because we are pulling back. Okay, so our entry is going to be below 1990.2. Then I'd place my stop at this high 1996.2. Sell custom with stop 1990.2. Sell stop order, buy stop. And I'm just going to use that high for right now. If we get another 2-candle flip, wiki area in here, I'll use that to bring my stop down just to manage my risk more closely. Again, above that high is going to be above 1996.2. Confirm and send. Sell stop, taking the breakout below our wiki area, 1990.2, waiting for that confirmation of the breakdown. Placing our buy stop above the high. You can see that's from our 2-candle flip prep screen zone. All right, and we're in on the Russell. Anyone take the prep screen zone as is by chance? Here we go, getting a little bit of momentum. Let's see if we can sustain this. Up 65, there we go. And this is going to be a little bit more elevated risk. Today is FOMC announcement day, 2 p.m. Eastern. Take quick profits while you're up. We can also always find additional entries to get in. Also keep in mind, taking quick profits when your risk is higher is also a good idea as well, because right now we'd be placing our stop up pretty high and taking on a decent amount of risk. Anyone take the Russell trade either as the breakout or as the zone entry? Nice job, Patrick. You've been doing awesome lately. There we go. Let's get that momentum. Anyone else in? Callie's in. Nice job, Callie. Yeah, crude oil might be a little tricky today. We'll go back to that one in a second just to see where it's at. But crude oil, I might be waiting for a little bit more information, time to pass. All right, great job, guys. So you can see as you're managing trades, also, we don't want to be scared and not know what to do. As price is moving in your direction, it's always good to initially grab those profits, and then we can find another entry point. For example, I'm going to grab the 120. Feel pretty good about that one, because now we're at a controlling breakout pivot. So here we had resistance, resistance, resistance. Here is that controlling breakout pivot to the upside. So what this tells me is, it says be a little bit cautious. We're at this controlling breakout pivot that pushed price higher. So let's grab some profits, lock in the $100 we're up, let it rally, because now we don't want price to go completely against us, since theoretically price could keep moving higher. I mean, the trend is up. So there is the chance that this could simply be a correction before the next impulse wave to the upside. All these things you want to keep in mind, and also looking at what's on the other side of your trade so that you know when to get out of a trade, which is why I got out here. So price is bouncing off that. Again, I am a little concerned this could be simply a correction before the next impulse wave. In order for me to get back in, I want to wait for another setup. That's going to be another fake out breakout, 2-candle flip. If another wiki area forms, I like when those form as well, just to show me and help with my confidence that we're going to start taking out this controlling breakout pivot here. Now, I like the short trade setups when we're at the top of a move, like the one that we had back on Monday. But now we're kind of trying to get in a little bit too late. So keep that in mind. We'll see what happens. If we want to get back into a trade, just want to wait for another setup. I would say there is the potential that there's some buying in this area. So I'm going to hold off on getting back in until I see another setup on the 1 minute time frame. But 125 on a quick trade like that, I'm good with that for now. We'll come back to the Russell, see what happens, but again, you're seeing a little bit of volatility there. Lock in profits while you're up. Always assess what's on the other side of your trade. Good job, Callie. Good job, Patrick. And these are ones where as you go down in time frame too, for more of the day trading side of things and entry points, you just want to be aware of what's on the other side. And this was saying that here's a pivot point. It's controlling this upside breakout. Could be some buyers here. So I don't want to try to force the short trade. Simply wait for another setup. If we got a break above, for example, this pivot, another fake out breakout, then we'll look to get back in short. Till then, I'm going to hold off for now. Let's go to our prep screen zone. Sometimes I should just take the zones, but for me, I kind of side on being a little bit more cautious. So I don't really take zones like this too often without having that confirmation on the smaller time frame that we're starting to see that turn. But overall, nice prep screen zone. Again, that was Russell, our 2 candle flip zone here, 1994, stop at 2001. And we're seeing that pan out right now. We also talked about how this was a 2 candle flip on the 1 hour. Our controlling breakout pivot was up a little bit higher. I like this one. This is the one where we should have been looking to get in short on a pullback to that controlling breakout pivot. Let's see, Patrick's comment is, my habit is taking zones. It's hard to change, but I'm learning. Yeah, so if you are taking zones, I'm okay with that. I would say make sure it's more, it looks more like a controlling breakout pivot versus a zone. Because these are the ones that we like to, I kind of like to see them build and form as a controlling breakout pivot is happening. This one, notice how we were rallying up, we were forming pretty big wicky area up here. We were bouncing off support, and it was rallying up into this basing area over here, and then we got the breakdown. If you can find it as it forms a controlling breakout pivot, I would say higher probability to take those as zone trades. These ones, as you start kind of moving down in price, these zones become a little bit more elevated risk due to the fact that as price comes back to your zones, it simply could be a correction and the trend has started to shift back to the upside. So with your zones, location is key. And also the trend leading up to the zone is important. Because again, if you're taking a sell zone, that means price had to rally to get that to that point, which also means the trend could be up. You kind of want to assess those things, which is why I like the zones that are a little bit higher up, take a little bit more time to wait for them. But overall, that's often where we have our 2 candle flips on the daily time frame. Let's go back down to the 1 minute. Well, it is working. All right, so it's looking a little bit more promising now. We can get one last bounce. I would like that. Let's see. What I'm going to do now is clear off some of these lines. Because now we formed a 2 candle flip. Could have gotten back in there. I was just a little bit cautious. I'm getting in too soon. This one right here. 2 candle flip as it's starting to break down. I'm going to look to re-enter. I'll look to go short at 1987.8. Stop at 1989.6. So you can see we grabbed our profit, 125 bucks. Now waiting for a re-entry can help reduce our risk, get back into a trade as long as we have a decent setup. What you can even do is if you don't want to take a zone again like this, if you're again a little bit cautious of the wiki area or the support, which would be down here. You can see this is why we're kind of rallying a little bit. If you don't want to, again, pick a top like this, simply wait to see how price respects it and then get in on your entry based on how price is holding this, or if it breaks out, waiting for a fake out breakout reversal. I'm going to hold off for now. Let's see. Okay, we're popping into that 2-candle flip. I'm going to see if we can push higher, and then I'll get it in on a reversal back down. 1 minute starts getting a little tricky just because of the volatility. Let's see, since I'm down on the 1 minute, I'm going to see if we can form a 2-candle flip to take the break down, but this may simply be holding our 2-candle flip. Let me see what the other equity indexes are doing. S&P is pulling back, NASDAQ pulling back as well. Dow got pretty wicky up there. We're all leaning more towards the downside. So let's see, short entry below that low wick. Oh, I think we're already kind of hitting it. Below 1986.2. Yeah, I missed that one. So I'm gonna go up in time frame for a second. 1 hour. I don't want to be too aggressive on the short just yet. It is turning into a pretty big wiki area. I would say if you're more of the swing trader, wait for price to break below a higher time frame 2-candle flip, wick over wick. So for me, kind of more what I like to look for is waiting for that wick over wick reversal, which would be taking it short once we break below 1983.2. That's the wick over wick that's holding up price at this point from this breakout. So going short below that, more indication of a reversal back to the downside. Keeping that in mind, again, just going down in time frame, up in time frame. Adjust it till it fits your trading style. And sometimes we go down in time frame, it gets a little choppy and messy. So just do what feels right for you. And I kind of want to wait for more top wicks to be showing selling pressure. Ultimately, you see where we're getting in, which is below this support area, waiting for a little bit more confirmation below 1983.1. Five minutes a little bit better for me. Let me just check the 10-minute. Again, adjust the time frame up or down till it makes sense to you. You can see the 10-minute as we adjusted it. Now we can see that this is that controlling breakout pivot to the upside that's holding up price. Therefore, going short below that, that would be our reversal entry. We'll just see a 15-minute. I'm going to to wait for a little bit more confirmation just because we're holding this support here. You don't want to be too overly aggressive with your shorts, especially if you are dropping into a support level. Let's see, 20-minute time frame. And adjusting the time frame up or down like this can help you just see slightly different pictures. This one, you can see there's a 2-candle flip here that caused that breakout, which is holding price up. Turning down the time frame, let's go down to a 3-minute. All right, I'm liking this one better. I'd want to get in short there. Let's see if we can get one more bounce up. 3-minute time frame, I'm liking this 2-candle flip here. Right at that support level, we may get one more bounce. The short entry, I'm going to take it here. Why I like this 2-candle flip is I'm looking left and I'm seeing it's lining up with the wickie area to the left quite a bit. All these wicks over here kind of overlapping. So I use those as signs that the sellers are in control at this point and pushing price down. Bell custom with stop. It's that 2-candle flip, 1986.4. Stop at 1988.6. So this is taking a zone trade. Because then if we get that breakdown, this is going to be more of that controlling breakout pivot that is causing the breakdown. Sell limit 1986.4, stop at 1988.6. Or if you want to wait for a little bit more confirmation, you can take it as price breaks below your support, which is going to be down at 1983.1. Okay. We'll see if we can get back in on the Russell. Again, just checking the other equity indexes. Russell pulling back, NASDAQ pulling back, S&P, Dow all seem to be pulling back. Go out to the S&P. And we gap down right into a wickie area. We initially had some buying coming in. Now we're seeing the selling coming in. Trading with the momentum to the downside, and how we gap down like this is showing overall that the selling pressure is at this point in control. So you want to be careful with picking bottoms, especially after a down move and then a gap down, because the more price pushes through this, the more it's creating those wick over wick continuation patterns to the downside. All right, we're in on the Russell on our short. Let's go back to Russell. All right, so there's our zone entry, 2-candle flip in this wickie area. A little bit more aggressive just because we haven't broken through the support yet. So keep that in mind. If you do want to wait for a little bit more confirmation, you'd wait for price to break through this lower support. It's getting in a little bit sooner, using the wickie area as kind of an odds enhancer. But overall, looking for that break of support first can give you more indication of that momentum direction. So we'll see how this one pans out. I've got my stop in place in case we push higher first. But if we do at whatever point continue to move lower, looking for that breakdown below 1983.1. Okay, so we'll see how that zone holds. Back to the S&P again, just really going to be choppy today. FOMC announcement day at 2 p.m. Eastern, so we've got to be aware of that. Market conditions are going to be much choppier than normal. S&P, a couple 2-candle flip zones. Got one down a little bit lower, down at 5031.75. Stop at 5022. And then a 2-candle flip sell zone. You can see this one's up a little bit higher, 5092.25. Stop at 5110.75. You can see where we're at now is we're hovering over a 2-candle flip down here. So you want to be careful with the shorts on a breakdown because we've got a 2-candle flip to the left. And then to the upside, we're going to be rallying up into a couple 2-candle flip zones. That CBP controlling breakout pivot, that's going to be more up here. This one's more of a drop base drop situation. This one up here going to be more of your controlling breakout pivot, or as Julius mentioned, your anchorable pivot, because that's that anchor that's leading the breakdown. So location is very important as well. Looks like we got stopped out on the Russell. Let's go back to that one. Looks like we're getting a pop up. And that one was a little bit more aggressive because we are still holding the support. I wonder if it just stopped out some people for it to then move in their direction. This wiki area is still holding. Notice it was a quick pop up and then breakdown. So I'll look to get back in on that breakdown as mentioned before, which might be happening right now. Stop 1990. I'm gonna do sell, stop, just waiting for more confirmation of that breakdown, 1982. All right. Again, where we're located on the daily chart, you can see it's different than the setup that we took on Monday, as we discussed. We're really in between support, the wiki areas on the daily time frame, and the and a 2-candle flip on the 1-hour time frame. But overall, go back to our prep screen, trading tip of the day. Again, we don't have a daily setup right now. We're just basing it off of the smaller time frames, which is where we can get kind of chopped up as we start looking for more detail and for more trades, is that we're missing sometimes the bigger picture. So again, keep that in mind as we start to wrap up today's session. Waiting for the highest probability daily setups can lead to some of the longest running trade opportunities. Like the Russell, we talked about this on Monday. We're trying to jump in now, but we can see it's a very choppy, whipsawy. The reason why is we go out to our daily time frame and there's no daily setup. So all we had was a drop down into a wiki area, which theoretically says look to go long. And right now we're trying to go short. So kind of trying to pick a top right now. Really, we want to do that when we have the highest probability daily setups as we mapped out at the start of our session, waiting for that breakout, wick over wick reversal into wiki area. That was the best setup for a short entry. Once the move is already underway, it can get a little bit choppier. Overall, we're still in this wiki area here, which says look to buy. So again, why we're getting chopped up is because we dropped down time frame and we're trying to go short, but it may not be the best location to go short at this point. All that being said, I'm gonna take my order off. Really want to wait for the best setups. Let's end it with the other equity indexes. S&P again. I'm going to zoom out to the 1 hour. Two-candle flip a little bit lower. Two candle flip up a little bit higher. I would say keep an eye on some potential bullishness as we approach the FOMC meeting. We're pulling back now. One thing that I'm looking at is this pivot to the left. If I take that pivot point and extend it right, you can see that's where price is really holding up a lot of those buy orders at this point. So be careful with your shorts. Again, we're in a pretty strong wiki area on the daily time frame, which means looking to go short may simply lead to more stop outs, more frustration. Really, we want to wait for those short trades when we break above resistance. We haven't really had that quite yet. NASDAQ. Two candle flip up a little bit higher, two candle flip down here. Okay, we got to pop up. It's just not the best place to go short, again, because of the location. Here's this pivot point to the left. And we're hovering right above that. So if we're looking to go short, our profit needs to be kind of reduced and honed in on because of the location of where we're at, and we're already at the end or possibly the end of a long running down move. We can be careful. We're in those wiki areas on the daily time frame. You can see NASDAQ, we've got our two candle flip there. We've got this long wick. We dropped into this long wick. Who can tell me, what would be the setup to go long? I'm gonna go to the micro NASDAQ just to get rid of the lines. What would be the entry to go long? So we've got a two candle flip over here. We've got this long wick here, matching up with this lower one here, which we're still holding. If we wanted to go long, where would our entry be? Who knows this? Daily time frame, if we wanted to go long, where would our entry be? Two candle flip, wiki area here. We don't want to jump in too soon. We want to wait for more confirmation before going long. So what would be that entry for a strong reversal, potentially? Any guesses? On the daily chart. Close of green candle, two candle flip. You could wait for price to go lower. I would say maybe. Again, especially if this is a wiki area, as price comes down, you can see the buying coming in. I'm looking at it being a little bit more aggressive though. So notice how price came down is that we gapped down. And right now it was looking like a red candle. There we go. Good job, Patrick. This is the one I was looking for. Break of support area, wait for reversal. Absolutely, you could do that. So if you're waiting for what Julius mentioned, I would say break of support, wait for reversal. We've got our support here. I would want to see a breakdown below that. Break below 17,287, reversal, or Patrick nailed it, high of the current candle. That would then be that wick over wick reversal back to the upside. You can kind of see how things are panning out. We're dropping down, we even gap down. I'm sure a lot of people are overly shorting right now, but if it snaps above the high wick of this candle, That is our wick over wick reversal back to the upside. Again, we're putting all the pieces together. Make sure we're looking at the bigger picture, honing in on some potential long trade as the markets are dropping. But ultimately, again, prep screen says waiting for the highest probability daily setups can lead to some of the longest running trades. We saw that with this recent rally and then drop. So right now, after this pullback, looking for that reversal back to the upside. We'll keep an eye on this. We've got live trading on Friday. Careful with the FOMC meeting today, 2 p.m. Eastern. It's just going to enhance a lot of this volatility that we're seeing. So day traders, be very cautious. You can see going down time frame, we're getting a little choppy, especially because we're in some of these wiki areas. So be careful with the longs and be careful with the shorts. Wait for more confirmation using the daily candles. Thank you all for being here. I'll see you guys all again on Friday for another amazing session. Thank you all. Thank you, Patrick. Great answers as always. See you guys all on Friday. Have a great day, everyone. Bye-bye.